Our last company today, Evan, is Apple. This is one of our favorite ones to talk about, but usually this is the boring quarter for Apple. The stock is down 7% since they reported. What happened?
So I think there's a lot going on here with Apple's earnings. I think one of the big reasons why it's down is the guidance for the next quarter wasn't too great, but we can get to that later. Revenue jumped about 20% to 62.9 billion, which is ahead of the company's own guidance. iPhone unit volumes were about flat at about 47 million, but iPhone revenue increased 29% to 37 billion, which is really just kind of more of the same that we've been seeing play out over the past year. Ever since they introduced the $1,000 iPhone 10 last year, they've really been pulling this lever hard on pricing, and pricing is really where all the growth in this business is coming from nowadays, because the units are basically flat. I mean, past 4 quarters, units have been more or less flat, but revenue has been up considerably because they're charging so much for these phones now.
Yeah, and it is kind of incredible that at a $1 trillion company and at a company that's putting up tens of billions of dollars in revenue, they are still capable of doing 20% growth. Not that we should necessarily expect that going forward, but it is worth emphasizing that a little bit here. Some of that is due to the success of the iPhone segment. Some of that is due to the success of their services segment.
Right. The services hit a new record at $10 billion in revenue for the quarter. A year ago, they had a one-time positive adjustment of $640 million related to a change in an accounting estimate. But if you exclude that one-time item, that basically means they grew 27% this quarter on services. And on a trailing 12-month basis, services is now a $37 billion business. And, they've been reiterating this target of $50 billion by 2020. So, I mean, they continue to just march slowly but surely. Just every quarter, they're just marching closer and closer to that goal. They're right on schedule.
The story with this quarter for me is, okay, the past results were great, but we are going to see some major shifts in how this company reports. And I think that really signals some major changes with what the company expects from some of their product lines. The financial reporting that we've gotten used to for Apple is going to be almost unrecognizable soon.
Right. So they made some very big announcements that are going to be really important for investors in terms of how they do their financial reporting starting in the new fiscal year. Since they just closed the fiscal year, so we're starting fiscal 2019. So the big one is that they're no longer going to report unit sales, which is going to be very controversial because that's always been kind of the most watched metrics with Apple. But they're also going to start breaking things down and separating between products and services. But they are going to give more granular detail around the cost of revenue for each products and services. So you will get a much better sense of the margin profile for services versus products. And, with their emphasis on services over the past couple of years, which is much more profitable, that I think that's a good thing. But of course, it's a bad thing that you're going to lose the unit data. But I think it's kind of, they've been trying to shift this focus in the narrative away from hardware to services for like 2 or 3 years now, and this is kind of like the culmination of it. They're just getting rid of the units altogether. Like, you can't get more clear than that. They've been subtly saying, "Hey, stop paying attention to units," and now they're like, you can't pay attention to units anymore. They're not giving you a choice anymore.
I know. And you have spent so many quarters and so many years putting together these very excellent Apple charts that track ASPs, what's going on unit sales. Evan, all those beautiful charts are going to be rendered obsolete. It's such a shame. In some ways, we get some more transparency. In some ways, we get less transparency. For my money, given what a big part of the business the iPhone segment is, I would like to know the workings there and understand what's going on the unit side and what's going on the pricing side. Obviously, my opinion doesn't matter much because they've already decided to make this decision. We just kind of have to take some solace in the fact that we'll have a better feel for what's going on the services side. Also looking forward, we hinted at this before, but the guidance that they gave for next quarter, it's going to be a big deceleration from that 20% growth that we just saw.
Right. So at the midpoint of guidance is at about 91 billion. That's about 3% growth off of a year ago when they did 88 billion. But this is kind of, what we talked about before, which is, you have such a huge business. You're running into this law of large numbers when it's really hard to put up, double-digit growth rates off such a humongous revenue base. I mean, there was like some speculation, like, are they going to guide to $100 billion quarter, which would have been kind of mind-boggling, but and not that that was expected. I mean, the analysts were at about 93, so they do have to kind of hit the high end of their guidance to meet analyst expectations, which is certainly possible. I mean, they have done that on multiple occasions on the December quarter, which is their busiest quarter. And I mean, it's kind of silly that people are disappointed with it, because I mean, they're going to be selling $1 billion worth of stuff every day. and how are you disappointed with that?
That is nothing to sneeze at. With the sell-off, Apple is actually dangerously close to falling below that 1 trillion mark that they were the first company to hit. Evan, we've talked about Apple a lot. We have both owned this stock for quite some time. I think the growth days, the crazy growth days for this company are over. This is not, if you're a new investor, your older cousin's Apple that is going to be doubling every 2 years. What are you doing with your Apple shares, and how are you thinking about this business?
I'm not doing anything with it. I've always been a kind of long-term shareholder with Apple. I've never really had any temptations to, sell it or anything like that. And even if, the growth isn't really there anymore, it's also worth remembering this buyback program that they have is just so massive that even if the top line's not growing a lot, your earnings per share are going to be growing quite a bit. So that will help drive the valuation of the shares and keep them cheap, which can actually help translate into more share gains. And not that they're just going to like double from here, but I think that that buyback program, which they bought back over $60 billion worth of stock this year so far, ever since tax reform, they've bought back $20 billion a quarter basically over the past 3 quarters. So that's not going away anytime soon, and so I think that's going to help kind of keep that bottom line EPS number strong for years to come.
Yeah, they've been really excellent to their shareholders in terms of capital returns. That's not going to change. That's one thing that I think we can continue to bank on so long as that cash hoard is nice and big. And so long as the services segment and the iPhone segment continue to post pretty solid results, I think we can be rest assured that that's going to be the case.
I mean, so the stock is so cheap that I've always considered it a very safe stock. I mean, they're trading at discount to the market for sure. It's something like 13 times earnings or something. The stock is so cheap that it's not going to tank or anything. It's pretty reliable play there.